Welcome to the channel. Today is November 8th, and we're going to be talking about when should you buy and when should you sell stocks. Let's get straight into it. So today I'm not going to start off as always of what the market is doing. The market is up, and I'm coming on here talking about how I'm a super bear. I sold all my stocks. It makes my prediction looks crazy, but a couple percentage points or something like that don't affect me. And before we get into the content that we're going to be talking about today, when to buy and sell stocks, this message that I'm going to be talking about today, I believe every young investor that's looking to grow wealth really need to listen to this video and understand. So if you could for me, please like, please share, please subscribe, because this content is going to be pretty good for the younger investor. But before what I'm going to start off with in buying and selling stocks, I'm going to talk. I'm going to read a little bit from the book that I wrote with my friend called The Culmination. And he actually, I got to give him his credit. He came up with this quote. He I believe he's trying to legalize it to where it belongs to him, but it's really powerful. He calls it the investor's dilemma. The agony that the agony an investor experiences over whether they bought an asset too soon or sold an asset too late, or bought an asset too late and sold an asset too quickly. So basically what that's talking about is that let's say you start a buying operation of a stock that you really like. And we can use Meta because that's probably my favorite company. I bought it at a good price, and I sold it here not too long ago at around 530, and here it is at 587. Do I regret selling my stock? Did I sell too soon? And so when you start buying, the stock could keep going down on you, and you can get frustrated, you can get upset, and you can think that you made a mistake. Same thing on the other end. And actually, believe it or not, it's actually once you have a winner, like with Meta. I bought Meta in the lowest I bought it was in the 90s. The highest, then I sold it all at the same time at like 530. Uh, Do I regret it? No, I don't regret it. And we're going to go over why we regret it and how I go about when I buy into a stock or when I sell a stock. And we'll just keep using Meta as an example. So when I first I first said, Meta is a really outstanding investment. So it was probably at like 375. They started going through their problems with Apple. We had with Apple, and the stock started to fall. I believe I made my first purchase. I always kind of nibble in. I purchase, a little bit at a time. I just don't swing my bat completely unless the stock is just super crazy. So I believe it was about 225. It went down to 150. I purchased a little bit more. It went down to 100. I purchased a little more. I want to say it hit a low like either 89 or 87, but my last purchase, I believe, was at 91, 92. And I probably purchased more at that price, money amount, obviously more shares because it was so much lower, but I purchased more on the low than I did. So I believe I brought my overall purchase price down to like maybe 135, from all the purchases that I purchased, and I ended up selling it at 530. So it was a big success. So I say that because when I bought at 225, I purchased, yes, I purchased too soon if you're going by the stock market. And we're going to get in how do you come up with that in a minute. So when I purchased at 150, did I buy too soon? Yes, you can say you can I bought too soon because it went all the way down to 89. But no one knows how a stock is going to fluctuate from day to day unless you have inside information. And there's one thing that I want to address that really bothers me before I finish getting into when to buy and sell. I see all these, because I make videos about finance, I always get all these videos of other people out there making videos on investing. And the majority of them is on trading. Most of them is on short-term trading. They're using charts and all that stuff. I'm here to tell you that stuff is garbage. I wouldn't watch that. I wouldn't invest like that. You're never going to make any money doing that over time. You might get a win here or there, but you're going to have losses. And the majority of the time that they're doing it with options, which are very dangerous, and you should really know what you're doing. And the way that I know that I'm proven correctly is all the big investors with big money, Ackman, Buffett, all of them, they all are investors. They're not traders. They're investors. There's only one trader that I knew that made a bunch of money. I just had his name in my mind and it dropped, but he made a bunch of money. He made 2 or 3 big trades in his life, and he shorted the British pound one time. Bill Ackman shorted interest rates one time and made a bunch of money. But those are just calculated here or there. Then they don't show when they did make trades their losses, what losses they made. But it's almost impossible to predict what the stock market is going to do day to day with unless you have inside information, which is illegal. So back to, and the reason why I came up with this video, because one of my sons asked me, how do I come up with the stomach to sell? And that's something that I experienced, something that I had to go through, which is something that's really, especially when you got a win. When you got a loser, a lot of times people hold on to it with the hopes that it's going to come back. But sometimes it's easier to sell because you can justify, well, I use it for tax purposes and stuff like that. So it's a little bit easier to sell. But when you got a winner that just keep going up, just keep like NVIDIA, just keep going up and keep going up and keep going up, it's actually really hard to sell that stock. But the way that you get past, as my friend calls it, the investor's dilemma, is that you gotta know how to value companies. And if you learn this, learn when to buy, learn when to sell, you more than likely, and as long as you're buying good assets, you're more than likely going to become wealthy if you're saving up. But so what I'm going to use is, and Buffett uses it all the time, and it's the easiest case, to use is a farmland. And there's this thing that Ben Graham got in his book, in The Intelligent Investor, called Mr. Market. And what Mr. Market is, and this is exactly what the stock market is, but we're going to use a farm as an example in what we're doing and how to come. I'm not going to teach you how to value a farm right now, even though I believe that valuing a farm right now is probably easier than valuing a stock if you're not going back and because you might not be going back looking at balance sheets, income statements, and stuff like that. But I have something to add on that before I get back to the point. The origin or origination of the stock market is for companies that are growing or trying to grow to raise capital by selling a part of the company to the public. And this kind of goes back to those traders. And what kind of bothers me completely is most people that call themselves investing in the stock market is not going back to the original purpose of what an investment is. You're buying a small portion of a company that you hope is going to grow in the future, which you hope that the stock reflects the growth of the company in the future. Like Meta. I think Meta still, hey, I don't own it, but I think Meta still got a lot of growth in it over years. I believe Meta more than likely going to be here, 50 years from now. And so if I buy 10 shares of Meta, at 500 and I spend $5,000, that's the money that I have. I'm hoping to grow that. But now we got all these options and we do all these charts. I don't know what a chart tells you about how a company is going to grow. So I went off on a little tangent. I'm sorry about that, but that from all these traders on here and people following them, that bothers me. And then people not using it makes no sense to me not using an investment for what it really is. So back to the farmland and Mr. Market. So if you owned a farm and and just like the stock market gives you quotes normally 5 days a week, Mr. Market comes and gives you a quote on your farmland. And let's say you have the opportunity to buy 100 acres for $1 million. The first thing you're going to do as a farmer, you're going to try to value the land. You're probably going to go and look and see have there's been any other farms sold in the area. That's probably where most people start at. That's where Zillow and all them come up with their prices. A lot of it is affected on what sold around them. So let's say on that $1 million property, Mr. Market came to you, every day he offered you 990,000. He offered you 900,000. He offered you 1.1 million. He wanted to sell his farm, and so he offered that price to you. So if you know how to value a company, just and not, I'm not going to teach you how to value a company on this video, but you probably want to look at the balance sheet. You want to look at the income statement. You want to look at that's basically how much they earn. You might want to look at the price to earnings, the average price to earnings over time, and you're going to want to look at how much is growing. You're going to look at what business are they in, what business are they in, and what's the position in the world of that business, and are you buying? If there's several businesses in there in that same industry, are you purchasing the best business in that area? So that's what you want, and that's what you would kind of do with a farm. How much, then you may want to, if you're going to grow corn, you may want to look at corn prices and stuff like that. So you're going to come up with a price in your mind. And let's say your price is $1 million. I want to buy this farm and I'm willing to buy it for $1 million right now today if Mr. Market comes and offer it to me. And that's one of the beautiful things about stocks. They're offered normally 5 days a week. They have after hours trading and before market trading, but normally between 9:30 and 4, Mr. Market is giving you a price of a company and you can either buy or you can sell. That's what you can do. So it makes it easier for us. So let's say to Mr. Market, you're looking to buy into the farm, and like I said, he was offering you 1.1 million. He offered you 900,000, and then let's say one day Mr. Market lost his mind, and that's what I'm waiting on. Right now, we're in a bull market, and I'm waiting on the next bear market. Let's say you don't know why Mr. Market lost his mind. You don't know if he had a death in the family. You don't know if he's sick. You don't know why. All you know is he needed to unload his farm. So he came and he offered you $500,000 for the farm. And you did your assessment, you did your evaluation, and you said you would pay $1 million. So it's like no questions asked. Hey, I'm buying. I'm buying right now. 500,000. And then back to my meta, here's the beauty. Because when you like something, if you're offered more of it at a cheaper price, more than likely you're going to buy more. And let's say in this scenario, we just bought the land for 500,000, and for some reason, Mr. Market, he owned the property adjacent to your property that he just sold you for 500,000. And whatever was going on, it's like it kept going worse. So he offered you the same amount of acres for 300,000. Now, if you purchase for 300,000, it may bring your value that you just paid of 500,000. It may bring it down some because you just paid 500,000. Now, someone which is you just paid 300,000 for a farm, almost the exact same farm for 300,000. But you buying it. You buying it because now you're paying 800,000, and so now your average price for both properties is going to be 400,000. And you believe it's worth the one is worth $1 million, and so and now you bought another one that you feel is worth $1 million. So now you spent $800,000 so your average price, I'm sorry, was 800,000, not 400,000. So you just spent $800,000 on two farms that you believe is worth 2 million. So that's when you know when to buy. That's when you know when to buy. And if it keeps going cheaper, and as long as the position of that company hasn't changed, you keep buying more. But you got to be strong in your conviction, and you got to believe. And if you haven't done no research on the company and you just got some stock tip or something like that, you're going to sell. You're going to sell because you haven't really done no research. You just got a stock tip, or you was watching CNBC or something, and it's like something like Nvidia, and it just keep going up, and all you know is it keep going up. So you decide to jump in, which is the wrong thing to do. So now you're sitting on this farm that's worth 2 million in your mind, and you bought it for 800,000. So because your value now was a million a piece, and that's what you believe it at. So now, a couple years go by, you working the farm, you making some money off of the farm. Let's say corn prices is doing pretty good. You happy about it. Now Mr. Market comes and knocks on your door. He come and say, well, we know you paid $800,000, but we prepared to offer you for both properties. We prepared to offer you 1.2 million. Now you done your research, you done your study, you know that it's valued at 2 million. In your mind, it's valued at 2 million. You're probably gonna say, nah, Mr. Market, get out of here. So he comes the next day. For some reason, you don't know why, he offers you 1 million. He's like, man, dude, I just turned you away yesterday at 1.1 million. I'm not gonna buy it for 1 million. And let's say times keeps going on, farms get hot, corn prices shoot through the moon for some reason. Then he knock on your door and he offer you 2 million. And you sitting back and you thinking, man, because everything moves up and down. Everything just don't keep going up, and everything just don't keep going down in most cases if it's a good asset. So you like, man, I paid 800,000. I value them at 1 million a piece. So now it's worth 2 million. So I would turn Mr. Market away because that's called being fairly valued. Okay, it's fairly valued. So you tell him no, I'm not selling. I'm not selling. But you're still doing all your research and stuff. Corn prices keep rising. Now wheat prices is rising. And for some reason, everybody's chasing farmland. Everybody wants farmland in your area. So he comes and offers you 4 million. So then you got to sit back and say, man, I know my property is really only worth 2 million. That's where I'm valuing that. Off of the land, let's say I'm making $100,000 a year, off of the two farms. I know I value them at 2 million, and now he's offering me 4 million. Do you take it? I guess it's going to be, up to you, and is the profits that is, because companies generate profits. Is the $100,000 enough? Because I have to add, when you own a piece of a company, you should act as if you own the whole thing. So let's say Nvidia has a market cap of 2.5 trillion. If you wanted to buy Nvidia, how much would you buy for? How much money are they making or how much money do they have to make for you to justify spending 2.5 trillion? So you decide to turn down the 4 million because you thought it was a little overpriced, but you felt as though it was still worth holding your farmland over time. It may do better. But he's adamant. He wants your property, and he comes 5 days a week. So a week after he offered you 4 million, and this is what I think the stock market is going through right now, he offers you 8 million. You say, man, then you got to what you're going to be weighing what other investment opportunities you have, man. But at 8 million, and we in this bubble right now, I could put that 8 million in T-bills and earn 4.5%, which is more than what my farmland is going to be producing. Let's say 8 million, 10% is 800,000. So you'll be making off 4.5%. You'll be making about 400,000 a year. So I was making 100,000 off the farmland. Now I can sell it for 8 million, and now I can make 400,000 just in T-bills alone, just in T-bills. And now I'm waiting. Now I'm waiting. And here's the crazy part. The crazy part is, as let's say corn prices start dropping, we in a recession. Who bought the land from you is in trouble, may come to you and offer it back to you again at 800,000. If you want to be a good investor, you should learn how that operates, how that works, and you will be a successful investor. Good luck investing, and we out.